Okay, so you've definitely been keeping an eye on some major financial news recently,
Absolutely. It's hard to miss.
especially the FTX situation, right? And how it's shaking up crypto, but also sparking these bigger talks about, precious metals, where society's heading.
Yeah, it feels like more than just one company failing.
Exactly. And you shared this pretty intense video with us, Clif High and Weir.
That's the one. They have a unique take on it all.
Definitely. So what we want to do in this deep dive is try to pull out the really crucial bits from their discussion, connect some dots, and help figure out what they think might be coming and, why it matters.
Sounds good, because they don't just stick to the financials, do they?
Not at all. They get into politics, potential societal shifts, using historical analogies, their own data stuff.
Right, the linguistic data analysis. It's a different angle.
So let's dive in. Their main claim is pretty explosive.
Yeah.
They're saying the FTX collapse wasn't an accident.
Yeah, they frame it as a planned implosion, orchestrated.
By who, according to them?
They use this term, the Kazarian Mafia, who they say run the global central banks.
Okay. And the motive. Why do it?
It boils down to competition, really. Protecting the U.S. dollar. They see crypto as a direct threat, especially with the dollar facing what they call a giant squeeze.
So take down the competition to preserve the status quo.
That seems to be the core idea presented, yeah, to sort of kneecap the crypto world.
And they really focus on Sam Bankman-Fried and Caroline Ellison.
Right. Not just as leaders, but as people specifically chosen for these roles. They even showed pictures in the video kind of emphasizing them.
Chosen how? Like setup.
That's the implication, that maybe their backgrounds, connections, maybe even their public image made them suitable faces for this controlled demolition, as they see it.
And it wasn't just about crushing crypto, was it? There were other alleged motives.
Uh-huh. They throw in things like money laundering, specifically for Democrats, and creating slush funds. So multiple layers of alleged wrongdoing.
They used an analogy too, right? Something about a big building.
Yeah, like an evil thought starts at the top, but then as it goes down through the departments in this big building, everyone adds their own agenda to it.
So the initial goal might be one thing, but others pile on with their own objectives, like money laundering or whatever else.
Exactly. It becomes this multi-purpose operation. They even connect it to polluting the medical system alongside the political system. It gets pretty wide-ranging.
Okay, so let's talk about the web of connections they describe.
Yeah.
FTX wasn't isolated, apparently.
Not at all. According to them, FTX's investments were like tentacles, reaching into almost every significant crypto player out there.
A deliberate strategy, then. So the collapse would cause maximum damage.
That's the argument, that this deep interconnectedness was part of the plan, ensuring a domino effect across the whole crypto market.
It wasn't just crypto companies involved, right?
Yeah.
They named regulators.
Oh, yeah. Gary Gensler, Mark Winjet, former CFTC guy, even lawyers linked to the CFTC, the SEC, and Alameda or FTX Ventures itself.
Wow. So the implication is complicity.
Hmm.
Or at least looking the other way.
It goes beyond just incompetence in their view. They suggest certain people in these agencies might have been actively involved or, deliberately turned a blind eye. It points towards alleged systemic corruption.
There was also this bit about buying data analytics firms. What was that about?
The idea there was to control the narrative. Buy these firms to basically fake the numbers, make FTX look way more successful than it was.
Like creating an illusion.
Exactly, an illusion of success, which then ties into the whole media campaign around Bankman-Fried himself, making him look like this genius kid. It was all part of perception management, they argue.
And then they dig into the family connections. SBS parents.
Right. Stanford professors, noted as anti-Trumpers in the source.
And Caroline Ellison's parents. That connection seemed important to them.
Yeah, her father, Glenn Ellison, apparently Gary Gensler's boss at MIT back in the day, and her mother, Sarah Fischer, also MIT, and they made a point that they're married.
So what's the significance of those ties in their view?
Well, the anti-Trump angle fits their political narrative, but the Gensler connection obviously raises questions about potential conflicts of interest or regulatory capture. Did Gensler know things because of that connection? Or was oversight lacking?
And Sarah Fisher's work at MIT.
Yeah.
Something about obfuscation.
Yes, specifically how e-commerce sites hide or obscure information. They draw a direct line from her academic research to the kind of stuff FTX was allegedly doing, making things unclear, hiding risks.
So they're suggesting her research might have informed FTX's shady practices.
That's the implication they make. It's a pretty direct and striking link they're suggesting there.
Then it got a bit stranger. Talk of lineage, the Titanic.
Yeah, that part felt more speculative. Mentioning Sarah Fisher's lineage possibly connecting to the Titanic and this idea of elites never mixing with commoners.
What's the point of that?
It seems less about direct evidence and more about reinforcing their bigger picture view of this hidden, insulated elite class that's been around for a long time, operating separately from everyone else.
Okay, let's shift to the historical parallels. They compared this to the 1930s.
Right, specifically 1932, 1933, after a big bond market crisis. They see potential echoes with a crypto crisis now.
What happened back then, according to their analogy?
Well, they point out that gold and mining stocks went down for about 6 years, didn't bottom out for like 3.5 years, only really recovered around 1939.
A long downturn for those assets.
Very long downturn. And they also remind us that owning gold was actually illegal for a while then, which obviously impacted mining companies too.
So the takeaway is that this FTX thing, and whatever big X event they think is coming, could trigger a similar long period of hardship.
That's the warning. Depression, breadlines, social unrest. They're suggesting the crypto world today might hold a similar kind of systemic importance relative to the stock market as the bond market did back then.
So its collapse could have disproportionately large effects.
Potentially, yes. That's the comparison they're making. Its failure could ripple out more than people think.
Now, about their data predictions, based on linguistics, how does that work?
Basically, they analyze language patterns, online blogs, social media, forums, looking for shifts in the emotional tone of the collective conversation. They claim certain patterns predict rising tension.
And they had specific dates.
Yeah, they mentioned tension building into November 13th, then a sort of plateau for about a month.
Okay.
Then a noticeable rise around December 13th, just for a couple of days, which they thought might be political fallout.
And then a bigger one coming.
Much bigger, they said, sometime in January. No specific date pinned down yet for that one, but significantly larger tension predicted.
They mentioned something about release language, usually following tension buildup.
Right. Normally, when tension builds in their data, they see language associated with release or resolution shortly after. But this time, they said that release seemed delayed, held back until right before that predicted January spike.
What does that imply?
It suggests the underlying issues aren't getting resolved. The pressure keeps building, and maybe that January event is when things finally, break open in a major way.
They speculated the December event could be, 3 times bigger emotionally than the FTX response?
Yeah, and that by January, the wider public might finally grasp the alleged connection between FTX and corruption within the medical establishment.
Wow, bringing the medical system into it too, that widens the scope dramatically.
It does. It suggests the fallout could spread far beyond just finance and politics, hitting trust in other major institutions.
And the January event itself, they speculated about Democrats, Ukraine, crypto, with like a money loop.
A round-robin scheme, they called it, alleging funds moving between those entities in some illicit way. If true, obviously, that would be huge political dynamite.
And they compared the delay in public awareness to Watergate.
Pointed out there was about a month, 32 days, they said, between the initial Watergate break-in and it really exploding in the public consciousness.
So things happening now might not fully hit the mainstream for weeks.
That's the idea. There can be a lag before the full scale of something sinks in, which could fit their predicted timelines for December or January.
Okay, moving to broader financial instability. They mentioned silver disappearing, central banks buying gold.
Yeah, classic signs, right? Signs of people losing faith in regular money and fiat currency and looking for tangible assets. Scarcity of silver, central banks hoarding gold. It points to nervousness about the traditional system.
And they had a pretty stark view on exchanges, didn't they?
They did. So the COMEX is maybe the only one really functioning properly, and even floated the idea that all exchanges could shut down.
Shut down? What would that even mean?
Total chaos for pricing. How would you know what crypto, gold, silver, even a dollar is worth if the main platforms go dark? It would basically break price discovery. A very extreme scenario, but reflects their lack of trust.
They also brought up something older, Reggie Middleton and Veritas, from 2017.
Yeah, recalling a past discussion about crypto's importance and Middleton's patent for peer-to-peer transactions, filed way back in early 2014, apparently.
Peer-to-peer. So cutting out the middleman, like banks.
Exactly. The idea is a decentralized system where people can transact directly, bypassing the potentially corrupt or fragile traditional financial infrastructure.
And there's a story about Jamaica.
Right. A memorandum of understanding to use Veritas on the Jamaican Stock Exchange, supposedly to fight corruption there.
It didn't happen.
According to the source, the SEC stepped in and blocked it, and they allege this was done at the behest of the deep state, specifically to protect FTX.
So established powers actively suppressing alternatives.
That's the narrative presented, that systems like Veritas, which could challenge the status quo, were deliberately hindered to keep entities like FTX safe.
They also talked about the Veritasium token itself. Only 2 million public.
Yeah, 100 million created, but Reggie apparently controls 98 million. And they contrast the SEC's tough stance on Veritasium with how they handled EOS.
EOS raised billions, right?
4 billion, yeah, but only paid a $20 million fine, which they attribute to EOS having alleged deep state connections, while Veritasium faced much harsher scrutiny. Perceived regulatory bias is the key point there.
And the data prediction for Veritasium was pretty wild, 1-to-1 with Bitcoin.
Yeah, that's a massive call. The logic, as they explain it, is twofold.
Okay.
One, the deep state is actively trying to crash Bitcoin because it competes with the petrodollar. Two, Veritasium, being truly peer-to-peer and potentially outside that control, could surge as people look for alternatives when the old system falters.
So Bitcoin down, Veritasium up simultaneously.
That's the scenario their data supposedly suggests. It's important they disclaim they don't own Veritasium, though they hold Bitcoin and Ethereum.
Right, transparency matters there. And the temporal clues for Veritasium.
They mention their data consistently points to late January, maybe early February, for something significant related to Veritasium. They used a past UFO forecast as an example of how these clues work for them.
Okay, so late January, early Feb is another key time frame in their view.
Seems so. Especially lining up with their general prediction of a big emotional spike in January.
Then they got into wild card scenarios. A Western collapse, a new leader.
Yeah, wild-ass scenarios, they called them. Like, total socioeconomic crash in the West, followed by a strong leader suddenly emerging, maybe someone with a T in their name. They hinted to replace a government seen as totally corrupt.
They explicitly mentioned Trump returning.
As a possibility, yeah.
Yeah.
If the federal government completely implodes under the weight of corruption, maybe someone like Trump could step into that vacuum. It's framed as a consequence of systemic failure.
And the anecdote about the 1950s town.
Oh, right. Where the whole town just spontaneously organized and confronted local corruption. It was an example of how quickly things can change from the ground up when people have had enough.
So bottom-up change is possible.
That was the point. It doesn't always have to be slow or top-down.
They kept coming back to the idea of the current financial system just
Yeah.
collapsing, a bleed out.
Yeah, that's their core conviction,
Yeah.
that the system, with all its debt and derivatives and funny money, is inherently unstable and doomed to fail eventually. It's just bleeding out.
And the Ukraine money? They questioned where it all went.
Big time. Billions, maybe trillions, they said. And they alleged a lot of it got funneled right back to Democrats somehow. That's a very serious claim, obviously.
Huge, if true, and they see consequences coming from that.
They mentioned growing calls for audits, for accountability on Ukraine spending. They think support for that effort could collapse, which would have massive global political ripples.
And this ties into their prediction of things accelerating, an incredible jump in orders of magnitude.
Exactly. They expect the pace and scale of events to ramp up dramatically, not just small changes, but fundamental shifts.
They even said their data scale broke for November 13th.
Yeah, that the emotional tension reading was so high they had to adjust their scale by 2 orders of magnitude just to measure it. That really emphasizes how intense they felt that period was.
Okay, let's talk about the future of finance and governance, according to this source. Reggie Middleton again, but approached by new leadership.
Yeah, the idea wasn't that the old guard wanted him to save their system. It was that some emerging new leadership recognized the existing system had to be replaced, and they wanted Middleton's tech to manage the transition, to prevent mass panic among, the normies.
So a controlled demolition and replacement rather than just a crash.
Potentially. A way to introduce a new system without complete chaos, even if technically a formal system isn't strictly needed for peer-to-peer.
They use that term shitty, loss of credibility.
Right, a lot of shitty certainty, credibility, trust. They see that as the tipping point. When people fundamentally lose faith in the institutions, in the money, that's when massive change becomes possible, even inevitable.
And the sheer amounts of money involved in the alleged FTX corruption, It seemed to genuinely shock them.
Yeah, even just the known crypto investments were staggering. It underscores the potential scale of the wrongdoing they're talking about.
Plus the claim about the Fed printing to infinity in secret.
That feeds right into the loss of faith narrative. If the central bank is just creating money endlessly with no oversight, what's the currency actually worth? Destroys confidence.
They brought up historical examples of trade during crises. Silver, stock certificates.
Back in 1893, 94, 1932, 33, people used physical things. Anecdotes about a country store in Missouri using barter, someone selling a Bentley for physical silver. When the main system breaks, people find ways.
Even local currencies. Wooden coins.
Yeah, wooden nickels or tokens in Washington state. Communities adapt, create their own means of exchange when the national one fails them.
So they really think we're heading into something like the post-depression era again, and that FTX is a bigger deal than most realize.
That's definitely their position. That FTX wasn't just about money laundering, but also about financing and bribing companies, spreading corruption way beyond crypto.
And pulling that thread will expose everything.
That's the belief. Unraveling FTX leads to exposure in politics, the justice system, the regulators. A systemic revealing.
They had a pretty harsh take on Bankman-Fried and Ellison themselves, didn't they?
Yeah.
Like calling them a slap in the face.
Yeah, suggesting the deep state deliberately picked people who were maybe book smart, but lacked real depth or sophistication, almost as an insult.
And their linguistic analysis backed that up, saying they didn't sound as smart as they should.
Compared to people like Jordan Peterson or Eric Weinstein, yeah. They argued their language patterns didn't match the image of genius innovators, suggesting they were more like puppets.
Then came those really dark allegations about logos and symbolism.
Right, the pedo-gay symbolism claim on logos and clothes. Very disturbing allegations, suggesting they were groomed and placed with little actual control. Need to stress those are unverified claims from the source.
Understood. But the core argument kept coming back to data, right? Controlling data analytics to control society.
That's the ultimate role they propose. FTX, the money, it was all secondary to gaining control over data flows, influencing perception, and ultimately controlling society itself. Data as the real prize.
They clarified obfuscation too. Not just hiding, but making things unclear.
Yeah, technically it means making data harder to understand. But, as they noted, skilled people can use that technique deliberately to hide things or mislead.
And connecting it back to Sarah Fischer Ellison's MIT research.
Exactly. Her work on search, obfuscation, pharmaceutical pricing, even countervailing power, which they interpret as controlling minds. With data, they see it all as directly relevant to what FTX was allegedly trying to achieve.
Plus, her family's anti-Trump views and the Gensler connection. It paints a picture from their perspective.
It certainly weaves together a narrative they find compelling, connecting academia, regulation, politics, and finance.
They also mentioned this speaker getting a YouTube strike.
Briefly, yeah. Just highlights that discussing these kinds of controversial topics can have consequences on platforms.
Okay, let's talk silver. The $600 price point from their data. What's the realistic take?
They clarified it probably wasn't a stable exchange price. More likely a brief momentary spike or the price you might see in a retail setting with huge premiums like we're seeing now sometimes, not the COMEX price.
So manage expectations on that number.
Definitely. But then they brought in Rafi the Wise's idea about purchasing power.
Right. Buying $1 million house for 75 ounces of silver.
Yeah, a scenario where silver's real value skyrockets compared to massively devalued assets like real estate, especially if the dollar tanks. A potential wealth transfer scenario.
But the price would be all over the place.
Yeah.
An ephemeral moving target?
That's the idea. No single global price. It would depend heavily on where you are, what the local conditions are, huge regional differences, maybe very illiquid.
So those $2,000, $3,000 peak price speculations.
They stressed those are based on the dollar becoming essentially worthless. It's a nominal price reflecting currency collapse, not necessarily stable purchasing power at that exact level.
And the price movement would be jagged? Alligator teeth?
Volatile, sharp ups, sharp downs, even within an overall upward trend. Not a smooth ride.
Back to localized trading, based on hardship.
Yeah, where things are worst, the value of tangible things like silver might be highest relative to other assets. It won't be uniform.
They expected barter and local systems to pop up, but maybe not for long.
Right. Self-organizing groups, local barter economies might emerge if central control fails, but they thought factors like the Magier movement might push for a quicker return to some kind of larger structure, maybe within 6 months. So a potentially brief period of total decentralization.
And Rafi's point about the extreme silver purchasing power being short-lived and local.
Re-emphasize that. A specific window, maybe in the next year, in specific distressed areas, where silver could buy major assets cheap. Not everywhere, not forever.
Could recovery be delayed by focusing on corruption?
They considered that. If the public's energy is consumed by investigations and accountability for alleged corruption, it might slow down purely economic rebuilding efforts.
What about future silver price control? A voluntary system.
That was an interesting idea. Not confiscation, but a new popular leader perhaps asking people to voluntarily sell silver back. Maybe for specific technical or industrial needs, not just economic control, framed as helping the nation.
Would that even work, with so few people holding much silver?
Good question. They noted the small percentage of U.S. silver holders, which could limit the impact of any voluntary program.
And shifting resources away from climate hysteria.
Yeah, they suggested moving away from WF-pushed initiatives like mass electric cars could free up silver and other materials for different uses, reflecting a potential shift in societal priorities.
Silver and military tech, 5G towers.
Yeah.
Potentially salvageable.
That was a more extreme thought that if things really break down, tech containing silver could become a source. Jet fighters, missiles, cell towers, unconventional for sure.
But small personal stashes are probably safe.
They seem to think so. Unlikely to be the focus of any major collection effort, voluntary or otherwise.
Okay, the Postal Service. The blue bankruptcy idea.
Revisiting an old point about the huge, often unseen amount of money flowing through the USPS system via money orders, etc., it's a significant financial network.
Despite its current problems. Staffing, financing.
Acknowledging those struggles, yeah, it's vulnerable now.
But the potential role as a national bank if others fail.
That was the speculative idea. With branches everywhere, existing security like bulletproof glass, maybe it could step in to provide basic banking if the traditional system collapses due to derivatives or fractional reserve issues.
And the blockchain voting patent from 2016.
Suggests the USPS has considered or could play a role in future governance infrastructure, like secure voting systems, leveraging its national reach.
Plus the historical power of the Postmaster General role.
Hinting that the position could become very significant again if the USPS takes on these expanded banking or voting functions.
Then Sieper shared that personal bit about being asked to run for office.
Yeah, local Republican groups apparently approached them about running for Secretary of State and another position. Shows how people outside the mainstream might get courted during uncertain times.
But they weren't keen. Preferred being a change agent.
Right. Said they lacked administrative skills and preferred focusing on research, analysis, direct action, shaking things up rather than managing bureaucracy.
Okay, finally, some advice for people navigating all this potential turmoil. Self-care first.
Absolutely critical. Physical health, emotional balance. These times could be rough, they warned. Need to look after yourself.
And try not to get too emotionally swept up.
Yeah, maintain some perspective. These big events will wash over you to some extent. Avoid getting consumed by the drama or fear. Emotional regulation is key.
Using survival stories as inspiration. Stelic 17.
Metaphorically, yes. The importance of discipline, resourcefulness, diet, mental strength lessons from tough situations apply.
So be observant, prepared, but don't fight every battle.
Exactly. Be dynamic, watch what's happening, be ready to adapt, but don't feel like you have to engage with every single crisis or piece of information. Strategic awareness.
Well, this has been quite the journey through that source material. Thanks again for sharing it. We definitely tried to pull out the core ideas from Clif High and Weir's perspective here.
Absolutely. It's a complex picture they paint, full of, well, challenging ideas about finance, politics, and where things might be headed. Definitely food for thought.
And maybe that leads to our final thought for you, the listener. Thinking about everything we've discussed, the potential for localized economies, the historical examples, the need for community resilience, what resources, skills, or connections might be most valuable right where you are in your own community if the world keeps shifting like this. Something to mull over.